Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, August 9th, 5:24 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in a uptrend, a cautious uptrend. Caution under short term, certainly. You can check over here at the trend gauge. Leadership neutral. We had a green arrow after some decent action the afternoon of the last couple of days, but not today. We've taken that off, and several leaders took a hit or got blown up today. We'll talk about that when we get to the tail of the tape and the charts. Short term, not improving. Just the Dow left standing above the 21-day moving average. Q and S&P have had multiple closes below the 21 now. We're still on yellow there, leaning towards red. Medium term, the Qs had the first close below the 50-day moving average, also the 10-week moving average, but technically the weekly closes don't count until the week closes. But it's not something you'd like to see anyway. That's kind of an area where you'd look for support, and we got it part of the day, but it fell apart over the last hour of trading. As far as the long-term 200-day moving average goes, all five major indexes still above there. Remember, the market doesn't get into serious trouble until the indexes break below the 200-day moving average. So what happened today? Uh, Not a good morning. And then right at noon, the buyers came in and took us all the way back from down 0.75% on the S&P to flat. And then as quick as they rallied, they hit the top after around 2:30 and just trended lower into the close. Bottom line, afternoon rally fizzles. The Big-7, all seven of the big leading NASDAQ 100 stocks finished lower on the day, and leadership took a hit also, as I previously mentioned. The final numbers are all red. RG8, this is our 8 growth ETF composite, down 1.1%. S&P 500 down 0.7. Opened slightly positive, up 0.1%, but topped within the first few minutes, actually based a little bit before that big leg down in the morning. NASDAQ 100 down 1.1%, opened up 0.1%, but then turned into a laggard pretty quickly. Dow Jones Industrial Average down a little over 0.5%. Same with mid caps. Russell 2000 small caps down almost 0.9%. Global 60/40 down 0.25%. Bonds traded in a tight range today, just barely negative. The longer bond was positive, meaning longer bond interest rates lower. In-house GROTECTION down 0.76%. We'll take a look at the charts, the changes we made to the portfolio, two very small buys today, and we'll check out the tail of the tape. Let's get right into it. Start off with the S&P 500. You can see that the declining 80 EMA combined with the now declining 21 EMA are acting as resistance on any rally for the S&P 500. We're approaching oversold on the daily basis. We had hoped a couple days ago with the afternoon action when we actually finished positive that would propel us back higher, but certainly disappointment the last 2 days, especially today, as we did rallying close at the top of the range, giving me cause for optimism on after Tuesday's session. That cause for optimism evaporated into the close today. S&P 500 still above the 50-day moving average. If you go over to the weekly chart, basically 44.48 is the 10-week. The low today 44.61, so within shouting distance of that level. Also within shouting distance, but now below, is the NASDAQ 100 versus its 50-day moving average. Again, coming into oversold. Oversold can stay more oversold. It's not a reason to buy. We did buy with our bounce off the 10-week/50-day moving average yesterday. We're down about 2%. We bought QLD on that bounce. We're down about 2% on that position. Needs to hold today's lows to stay in the portfolio. You can see the close below the 50-day moving average just by 0.1%. So not a deal killer versus the 10-week moving average, 0.5%, below there. Again, not a deal killer, but you can see the weekly starting to roll over. If the weekly gains momentum and breaks, we'll be completely out of the way as in fact, if the S&P and the NASDAQ close the week below the 50-day, we cut our floor beta from 1.0 down to 0.6 until we get to the 100-day moving average. NASDAQ 100 leading the way lower at this point. The index holding up the best is the defensive Dow Jones Industrial Average. Note the 3.5, almost 4 week relative strength that it's been showing. Three of the last 4 days closing and bouncing at the 21-day moving average. Let's go to mid caps. They tried to rally back above the 21-day moving average, which has now rolled over, and were turned back today. An inside day there, also coming into oversold on the daily stochastic. IWM small caps, inside day also similarly rejected, not quite up to the 21-day, but we need to see some buyers coming in here. They're small caps. When you see a move, normally it means that oils and banks moved in that direction. Well, today oils moved in the opposite direction, but banks were somewhat weak, not quite offsetting that, but tech is also weak, and that's dragging pretty much all of the indexes lower. Let's go to the VIX. The VIX was negative most of the day today, even though the indexes were negative. During the sell-off late morning, it turned positive, back lower during the day, still closed slightly down on the day, a little bit of a surprise there, but still below the 50 and the 21-day moving average, and above that 15 level. That's not good for stocks. Certainly don't want to see any more spike off of this. Let's go to bonds now. The broad bond index. 2 tight days in a row, hooking up off of oversold. So possibly some relief on interest rates. No guarantee. Let's check TLT, the long bond. Also up today, meaning pulling the long rate lower. So this is looking like a washout here. We've recovered most of that 3-day sell-off. We've recovered about half of it. So if we're going to head lower here, this is about the time, or the 61.8 retracement, as always. Looking at it from a Fibonacci perspective, the long bond TYX yield lower by 0.6%. The 10-year bond yield lower by 0.35%. Flip to the dollar now. Dollar traded tightly. Look at a 5-minute chart here. Up 0.07%. Not much volatility on that today at all. Near the top of its range. Stock bulls want to see that pullback. How did that compare to silver and precious metals? Just up a little bit, but silver down 0.5%. Gold down 0.5%. Gold stocks ended up slightly positive on the day, so a little bit of a divergence there. How about Bitcoin, BITO? One of the miners, Mara, is it? Yeah, Mara reported, nope, that reversed negative. Bitcoin slightly up on the day. The Bitcoin miners down for the most part today. Let's see, did we hit all of the ETFs? Yes, we did hit all of the ETFs. Let's go to the tail of the tape. Okay, here we are. You can pause this if you want to check. Actually, the VIX near unchanged today. It did close at 15.96, which was a very small, down 0.2%. Fear and greed down 2. News, not a lot of news today. First of all, we'll get updated AAII information tomorrow. That's the bull bear review for a sentiment standpoint. CPI before the market tomorrow has the potential to move the market. PPI Friday before the open. Day count, 2 days down now, 6 days below the ADMA. 2 days now below the 21 EMA for the S&P 500. Our expectations negative until we get back above the 21 in the short term. The S&P held this 44.58 level that we've been talking about. We broke below the S1370 level on the NASDAQ 100. From a sector standpoint, TLT, oils, solars, and defensive sectors, staples, utilities, and real estate up on the day. Down the Big-7, that's tech, and Chucky, XLCKY, semiconductor, software, and regional banks. Here's our focus list. 2 small buys today. VRT, we've been talking about this, big move up, data center products. Ted's going to talk about this in Friday's podcast. And we also bought Bros. We'll take a look at those charts momentarily, and a few other winners and losers on earnings and recently. But the bottom line on the day, our beta ticked up slightly with those 2 1% pilot buys. Afternoon rally fizzles, Big-7 and leaders hit the hardest. NASDAQ 100 below the 50-day moving average. Not a lot of good news in the market today. Let's get to some charts now. And we'll start off with the 2 stocks that we bought. VRT, we've been eyeing this. They had that secondary. It's priced at 34.91. That's right where the stock closed today. The secondary price often puts a floor or close to a floor in there. We'll give it to the ADMA since this was a big volume move up on earnings and a power move up with 507 up 30%, 510% above average volume. And speaking of power and above average volume, Bros reported today, and this has been a sleepy stock for a while. Almost 1,000% volume, up 18%, clearing this resistance over the last 3 months and the 200-day moving average right into this 33 to 34 level of resistance. That's really what we wanted to clear, and on any pullback, it should hold that 200-day moving average. So we took a pilot position in that today. NVIDIA is not acting well, close below the 50-day moving average today. Our last buy is still up over 20%. Continued weakness or a weekly close below the 10-week and our 50-day will force us to sell that, and then we'll just be with the holding. We have some rules for how far we're willing to let things go below the 50-day moving average. It's normally not more than 4 to 6%. Or the 10-week moving average, 4 to 6%. But this 400 level is a big level from the prior uh, pullback and breakout relative to the last earnings gap up. So for some clients, we'll give that room if they have big gains. For more recent clients, we'll cut that loose on a close below the 50-day moving average. And that's really the only other individual position that we own. NRGU has been the standout. We've got 30% gains and I think 18% gains on our 2 buys on this. Gap up on energy. Remember the gap down yesterday and rallied all day long. That power continued today. We got a little bit ahead of ourselves and we closed in the lower part of the candle, but energy stocks are really the only charts outside of a few leaders that are looking extremely attractive. Let's go to some other things that are looking pretty attractive. Celsius just blew out earnings, up 20% today, 335% average volume, massive move up. We'll see how this digests that move up. Axon, the former Taser, had been a laggard for a while, but had a nice day today. Gap up, sitting on that 200 level, didn't clear out of a base, but positive today. We already showed Bros, QLYS. 2 stocks that the leadership in the security seems to have uncovered is QLYS acting fine and making a higher close since its earnings report, and also 10B bouncing where it should have. The 21-day moving average after its earnings move up. These are acting much better than the normal stalwarts like Palo Alto. Let's see what else. Okay, now for the bad news. Upstart. Use this as a trading lesson for when something is just a runaway freight train and it's above the ADMA and it starts to break. That's a change in character, take something off. You This gave back every bit of the gains from this breakout and then some, despite despite 500% growth in earnings. Okay, it's kind of artificial from 6% to from 1 penny to 6 pennies. But look at this move down here, breaking the 21, breaking the 50. Just awful. 4 sessions completely coming undone. You got to lock some profits in at some point. These things don't go to the moon. That's probably the biggest flaw in canceling is when people buy something and it goes up and they've got nice gains. They think it can go up forever. And you've got to look for changing character in these leadership type stocks to take some off the table, or you can just completely watch the money get flushed back to the market. And you got to lock in profits. I mean, O'Neill had that 3 to 1. Um, 7% losses, 120% gain makes up for it. And he took the majority of his profits at that 20 plus 20%. It was only the true market leaders that he let continue to run. So got to lock in some gains. That's part of it. AI, another AI software stock coming apart over the last 4 sessions, well below its 50-day moving average now. And then these next four are in the 21 over 21 list. And the way they're looking, they'll be near certainly coming off today. Palantir after earnings, no buyers coming in, down 10.5% today. SMCI, we've already talked about this, and there's a lesson in here. Part of the title of today's video was SMCI. What if you can't trust a company's guidance? So back here on 7/20, SMCI put out a press release raising their guidance significantly for the upcoming reporting quarter. And you can see what the stock did, went from 300 up to 357. So a 20% move in a little more than 2 weeks. And when you raise guidance that close to earnings, it gives you some bit of confidence that you can hold the stock, that you wouldn't expect an earnings blow up. But when they reported last night, they lowered guidance versus what they just put out 3 weeks early. This is just obscene, and it's an absolute no-no to Wall Street. When Wall Street can't trust management, they're going to sell the stock with both hands. And you can see this down 23% on near 300% above average volume, breaking the 21-day very clearly. Also closing below the 50-day. We sold after hours at 303 yesterday, our last 1% of it, as I mentioned in last night's video. But this is just awful. And apparently they were questioned a lot. And what they really were trying to do was dance around the fact that NVIDIA is not giving them the number of chips that they were hoping to get. And that's slowing their installation. I know some people that are very familiar with this whole data center build out process, and they didn't name NVIDIA, but they've got a good, the last thing you want to do is throw your supplier under the bus. And they didn't mention NVIDIA, but it's pretty clear that they pointed to supply issues without naming them. And bottom line is, this is terrible for shareholders. You have to pay attention when you own something and it's coming into earnings. I've been through quite a few of these. When there's recent up for guidance higher, normally you don't worry about it at all. But that conventional wisdom went in the wastebasket after this, and you can see the awful results of what happened to SMCI. So that'll be coming off the 21 over 21 list, and we are sold all out of it. DraftKings got kind of blindsided by Penn Gaming inking a deal with ESPN. They're going to rebrand it as ESPN Bet. And apparently the market did not like this at all. Their direct competitor down 11%, decisively breaking the 21-day moving average, still holding the 50-day moving average. And remember, a lot of these leading stocks, when they pull back to the 50, that is the first spot for adding or even initiating a smaller size position. And basically that's where we are here with DraftKings. So we'll see if it can get it together. It has been a leader, but we know what's been happening to leading stocks over the last week. And finally, SYM gave up every bit of the gains from robotics, the next hot thing. Great earnings report, up 50%, and gave it all back in a matter of a week and a half. So breaking the 21, sitting on the 50. Again, remember what I said about the 50-day moving average. This isn't its first visit to it. It just visited it there 3 weeks ago also and undercut for a couple of days before taking off into earnings. But like I said, so these four leaders, unless we've got a dramatic turnaround, will be coming off the 21-21 list by the end of the week. And with that, I am going to wrap up today's video. As always, love to hear from you. I really appreciate all the likes on YouTube, and I also appreciate a lot more people leaving comments. I reply to every comment that you make, even if it's just a thank you. I'll acknowledge it. So we like the interaction with the people that are watching our videos, and our YouTube has been growing. Our YouTube presence has been growing quite a bit, and we appreciate that. So with if you want to just email us directly, my email is don@revereasset.com, or my partner Dan Stewart, dan@revereasset.com, if you're interested in becoming a client. I do want to point something out today. We had a conversation with a prospective client today, and she thought that we were a hedge fund and would charge 20% of the profits, and we absolutely do not do that. Our fees range from 1.4 to basically 1% to 1.4%, depending on what your amount of assets under management is. But no, we do not charge a performance fee. It's very reasonable. In fact, it's in the ballpark with a lot of pie chart advisors that provide no downside protection. So reach out to us if you're interested. The phone is 855 Real Wealth. That's 855-732-5932. Remember, it's not how much you make in the markets, it's how much of that you can keep. We've got 3% pullback off the top in the S&P, about a 4% pullback in our portfolios, a little over 5% in the NASDAQ 100. Those are reasonable pullbacks, but we're at kind of a key area. We need to hold the 50-day moving average or the 10-week moving average on these indexes on this pullback, and or we lighten up again. That's just the rules, the system, the way it lays out to protect the downside. 4% pullback is normal, happens all the time, and we're still engaged in the market. There's things that are a couple things that are holding up, but really our engagement is mostly in the indexes now. But if that continues, and energy also, and if that continues to get weak, I mean, we'll just get stopped out. That's just part of being in the market. We fight like hell to keep the gains that we've gained when the market wants to take them back. And as I said, reach out to us if you're interested in this approach. With that, I'm going to wrap up the video for Wednesday, August 9th. This is Don Vandenbord with Revere Asset, telling it like it is. Thanks for listening and have a great day.